What's going on, guys? Mike Sheemer here. Just wanted to go over today. Also, quick subscribe and like if you can, comment if it's available. But today I just wanted to go over, without going into too many specifics, what I will be doing or how I'm planning to deal with a bear market or a market crash, which is a very valid concern right now with the market at record highs and it's just out of control. You know, S&P, NASDAQ, Dow Jones, they're all incredibly high. Russell is, pretty high. Probably at record highs, I'm not sure, maybe to a lesser extent. But now there's going to be rate cuts. So that's going to buoy up the small businesses, I believe. So they'll be able to borrow money at a lower rate. That'll be easier for companies that have limited capital. You can see I'm not some young meathead. I maybe a little meathead, but I'm bald. I'm getting old. I'm almost 40 years old. So I have a multi-pronged approach to a bear market or a market crash, even, because I've really been honestly believing that with the U.S. presidential election that we are going to hit a lot of turbulence. September is already infamous. The first few weeks, I believe, are on average some of the worst in the market each year, which is okay because it bounces back usually, October, and then you start reaching some new highs in November and December, and then maybe a little sell-off in January. It really depends. Sometimes retail investors, they spend a little too much over the holidays, then they have to liquidate in January. But you can look that up for yourself. So approach number one for a market, here, let me turn some of these windows down, for a market downturn for me is I'm incredibly diversified, maybe overly diversified, most people will probably say. I have over 700 individual stocks and ADRs on all 6 continents that do business, not in Antarctica. Sorry, there are no publicly traded companies there. So every single continent, North America, South America, Africa, Europe, Asia, and Oceania or Australia, whatever. So I'm very diversified. I have about 45 ETFs now that are paying mostly mid to high income, mostly monthly or weekly, some quarterly for sure. I certainly may get some very conservative index fund ETFs. I've had them, of course, many times. I still have a couple, but I have so many stocks that it's not really necessary. I kind of have my own indexes almost, internationally and in the US. So that was the first one, huge diversification. Number 2 is big dividends on every single one of my holdings, dividends. I should say some small, some medium, some very high. So everything is paying a dividend or a distribution. And that covers my basis. So whether the stock goes up or down, whether things are looking bleak or not, almost every single one of those are going to pay a dividend. If they don't, if they have to cut their dividend 100%, then I'm going to sell it. I'm going to sell it within probably weeks or months, it depends. I had to do that with Intel, even though I know it's going to bounce back. And I just wanted to free up that capital for other stocks and ETFs instead of waiting for it to bounce back and sell at a profit. So I sold at a small loss instead. It's tax harvesting, whatever you want to call it, tax loss harvesting. I remember I did that back in the day with Lumen Technologies when they eliminated their dividend 100%. And unfortunately, that stock really tanked. And they've had a little kind of meme stock comeback recently, which is interesting. But so that was number 2, big dividends and distributions from all my holdings, regardless of the stock price, whether it falls or not. Number 3 is recession-proof or recession-resistant holdings and industries. This is huge, okay? So you're going to have, there are certain industries that thrive during recessions or even depressions. People buy them no matter what. Even if they have a lower budget. Let's see if I can close this. Even if people are in debt, they're losing their homes, whatever the job may be, they get laid off, or the market is way down. People are always, for better or for worse, I'm not saying this is a good thing, but they're always going to be purchasing alcohol. They're always going to be purchasing tobacco products. They're always going to be, with the election craziness, they could be purchasing firearms, especially if they think the Democrats are going to win, or they do win, and there's always potentially stronger gun laws that could happen. Probably not, but you never know. There's always that fear-mongering, and that leads to a gun sale spree. People are always going to be eating. They're always going to need food, clean water, utilities. I have so many food companies, it's out of control. They're always going to be eating out at restaurants, although that can drop for sure. But everyone needs to get gas or diesel or oil. Everyone's going to need fuel, so those companies can certainly be crucial during a market downturn. I'll let this guy go. There's so many. There's Dollar General. I have a whole video on that. Why I think Dollar General, Dollar Tree, Dollar Stores, and other similar discount companies like Costco, TJX, Ross stores. Why those companies will survive and thrive in a market dip or a market crash, even. If it's probably it would be temporary, a correction, whatever. It's all gonna be similar. You just use your common sense and look at the history of what does well during recessions or depressions, and what companies are a little bit riskier. Like tech companies could possibly be riskier. They might drop more during a downturn, just as an example. And my fourth, I think it is, my final one I'll just discuss today. These are just off the top of my head, because there are other strategies I use. But the other strategy, I have a small amount of index shorting ETFs that pay quarterly distributions. I think most of them are pro shares, so like SPXU, SQQQ, SDOW, and I think there's one more I have. And those, of course, when there's more volatility, there's more market declines, those prices go up. Those holdings increase in value. They don't do so well during a bull market or when the market is flat. But every time the market drops, they're one of my biggest daily movers, and they go up 5-6% or something really fast. So those will increase in value if the market drops, and I can sell those for a profit, or whatever I want to do. It'll just buoy my portfolio. Number 5, I just thought of this again. I meant to say it earlier, is things like commodities and precious metals. So I have ETFs now. I have one ETF for commodities, I think around 20, I think that's iShares, 20 commonly traded commodities, and then one, let's see if I can get that fixed a little bit, and then one for precious metals as well. I think it's the gold index. And I have tons of things related to commodities, tons of stock holdings around the world related to commodities, related to precious metals, such as mining stocks, food companies like Dole for, different fruits and so forth. Anyways, so in some ways I'm hoping for a bear market or a decline just to get some better bargains, because I can reevaluate my portfolio, do a little buying at a discount, get some fair prices for once, and while other people are liquidating, they're struggling, I will be making big moves. So in a bull market, that's where people make money. In a bear market or a crash, that's when people make real wealth long term. That's when the rich start buying at a discount, and then months later or a year or two later, they are back in black. They're out of the red and they're way up long term. So that is what I am planning on doing, what I will do. Sorry again for the video not being so good. I got my car holder coming in the mail, so it will be better soon. And thanks for watching. Hit subscribe, take a look at my links and my businesses below, and I'll talk to you soon. Thanks.